So in this video, I basically wanted to give kind of a brief overview of what interest rates actually are, because I think in the news recently, they're everywhere, and I think a lot of people don't really know what interest rates actually are and don't really understand how they work. So first of all, my name is Alex. I'm a third year economics student currently on placement in financial advice. And if you enjoy finance or at all want to learn more about it, then please consider subscribing. Interest rates are essentially the cost of borrowing money, or the costs associated with borrowing money. For example, if you turn to me and say you want £100, I'll say, yeah, sure, I'll give you £100, but because I'm taking on risk here, you might not pay it back, and because it's a little bit of an inconvenience to my life, I'm going to charge you this percentage. And that's where you'll see something called APR. So if you watch an advert and you see APR written on it, that means the annual percentage rate. And that's essentially the interest rates you'll pay when borrowing money. And then equally, you can also save money and get an interest rate. So for example, if you say to me, you've got £100 and you don't know what to do with it, I would say, okay, give me that £100 and I will give you, let's say 1%, so £1 per year, for as many years as you want to keep the account. And this is called AER, annual equivalent rate. And that's basically the interest rate of saving money. Fun fact here, the banks will make money on the difference between these interest rates. They will always give the saver a lower interest rate than someone that wants to borrow money. And that basically means that the bank is always bringing in more money instead of losing it. And that difference is how banks make money. Retail banks anyway. Now, interest rates aren't to be confused with base rates, because a base rate is the interest rate of the central bank. And I think in the news you see a lot of stuff about the interest rates. So the Bank of England is increasing interest rates. They're not, they're increasing the base rate, but the base rate is an interest rate. It all gets a little bit stupid and complicated, but it's all financial jargon. And that is very simply what interest rates are, and that is the basics understanding of how interest rates work.